Hi everyone, I'm Lee Pacchia and I'm here with Professor Houman Shadab from New York Law School. Today we're talking about Bitcoins. Thanks for joining us.
Thanks for having me.
So we had this news drop this week that the IRS actually weighed into the debate with some guidance of their own. Interesting point, they made a distinction between property and currency, said Bitcoins are really property rather than currency. What's the difference for those people playing at home?
Well, it has been a long time coming for the IRS to finally issue some guidance, and this guidance actually explicitly mentions Bitcoin, but the ultimate impact is basically good news for investors in Bitcoin because it subjects Bitcoin to capital gains treatment, including long-term capital gains tax, which is generally lower than taxing or viewing Bitcoin as a foreign currency or some type of currency. So it's generally good news for investors, but it does impact different players in the Bitcoin economy differently. It probably has the most onerous impact on Bitcoin miners and sort of users of Bitcoin who might use Bitcoin in their everyday purchases. Mm-hmm. For miners, they get taxed when they create or find or mine new Bitcoin. They get taxed on the sale if there's a gain. And they also get taxed just as a business if they're mining Bitcoin for the business purposes. Generally speaking, it also has a pretty hefty reporting and record-keeping requirement for users of Bitcoin because essentially you'll be having to track the gain or loss on any particular spending of Bitcoin from the time you bought it and the price you bought it to what the market value was when you exchanged it, let's say, for something from Overstock.com or some other merchant that uses Bitcoin.
Looking at the guidance that the IRS came down with, is it possible to tell what the regulatory landscape is going to look like going forward? Does this indicate that the federal government is going to be more heavily involved going forward, or is it too soon to tell?
Well, it's certainly saying that now and going forward, the federal government is accepting that Bitcoin is legitimate, it's real, it's being used. It also reflects that it's a bit of a patchwork because Bitcoin itself is unique. It means different things to different people in different circumstances. So it makes sense for the Treasury Department or the Financial Crimes Enforcement Network to see Bitcoin as a currency for those purposes of money transmission. It makes sense and was predictable, in fact, that the IRS would treat Bitcoin as a property for tax purposes. The SEC or court has interpreted securities regulation as applying to Bitcoin investments as securities, whether they're denominated in Bitcoin or not. And really, we're just sort of waiting for the Commodities Future Trading Commission to come out, and they probably will predictably say that Bitcoin is a gold-like commodity, and derivatives on Bitcoin will be regulated just like any other futures contract or swaps contract or perhaps option as well.
So if that happens, is it safe to say that the Bitcoin economy is still poised for the growth we were talking about 2 weeks ago?
Yeah, I do believe the Bitcoin economy is still full steam ahead. There's nothing really a large burden that's being placed upon Bitcoin users, investors, or miners by the recent regulations or what we expect to be going forward. Although that being said, though, for exchanges and for miners, they will probably have the biggest burden in terms of taxes, in terms of just the level and amount of their tax, and the reporting obligation. Probably the reporting obligation is something the IRS will clarify about how exactly you will account for in terms of accounting the price you purchase Bitcoin and the actual sale. Because if you buy a lot of Bitcoins, the question is which Bitcoin are you using for the purposes of calculating your taxes?
We were talking before about the whole concept of derivative products being originated and sold for Bitcoin. Mm-hmm. Can you walk us through that idea and why that's necessary at this point?
Yeah, I mean, the basic idea is that Bitcoin, to its detriment, is relatively volatile in terms of its exchange value for dollars or any other currency. But to its benefit, financial markets are already poised to protect against volatility, and that's what derivatives are primarily used for, is to protect commercial users or investors or whoever else is sort of exposed to Bitcoin price risk, protect them from volatility. So just options or swaps or futures contracts, those are ways that historically have prevented all types of companies and businesses against the volatility of the goods that they use, that they purchase, the inventory they have. So right now, it seems like almost every week there's a new company or new service that's trying to help merchants, investors, and users manage that risk, including the recently developed options platform. Just like you could buy an option on the stock, you can now buy and sell options on Bitcoin.
This is wild stuff, and you have a massive paper coming out on just this topic. Where can people access it?
Yeah, it'll soon be available on the Social Science Research Network.
Professor, thanks so much for
having me.